Good day, accounting students. So today we'll be focusing on balance sheet. So required. So you need to complete your note for trade and other payables, which is note number 9. Right, as given on your answer sheet, you have creditors control, accrued expenses. So let us start with the following balances on your trial balance. Therefore, indicated here it was accrued expense. So now we have our accrued expense amounted to 4,200. So now here we will record our 4,200. Thereafter we have income received in advance, which is 3,600. So we have 3,600 as payable. Creditors for salaries, also known as net salary, it was given as 12,300. So we have our 12,300 here. Therefore, SARS payee falls under trade and other payables. Therefore, we also have the last one, which was UIF. So we will record 4,800. So now remember, we are starting with the balances given under our trial balance. So moving right along to our 3.2, which is it's our equity and liability section that forms part of our balance sheet. We have owner's equity consists of capital, right? So this is owner's equity, and then remember again our drawings form part of owner's equity, as well as our so it's these two that form part of our owner's equity under our balance sheet section. So let us move to non-current liabilities. Non-current liabilities, it's our loan, which is now we have the loan Bank of South Africa, 30th of June. So we will record this under non-current liabilities as given. It was 400,000 here. So our current liabilities, so we have trade and other payables. So meaning our creditors control will be recorded under creditors, current liabilities, and bank overdraft also, it's recorded under current liabilities. Accrued income, so here since we are doing our honors, our equity and liabilities, we won't record our accrued income. So prepaid expense, remember we recorded our prepaid expense. Income received in advance, also it was recorded under payables. Prepaid expense, again, we will not focus on prepaid expense since we are doing equity and liability section. Creditors for salaries, it was recorded again, SARS payee as well as UIF. So now we have trade and other payables as creditors control here amounted to, let us open brackets, 38,500, right? So remember we had also our bank overdraft of 3,200, right? So let us go to the next page. So now given the following information, additional information, adjustment year end, after taking into account information A, the adjustment, the correct net profit amounted to 245,000. So this profit will be recorded on your owner's equity, right? So let me write this down. So owner's equity. So if you don't see, so you know OE stands for owner's equity, right? So it's a profit. So it means that profit under owner's equity, right? This profit we will add. Okay. So we will add. So that's 245,000, right? So Yeah. So we added back that 245,000 under equity. So basically, it makes sense how. Remember, capital, it's money to start a business. So whenever you make it, you made a profit. Let us say you invested, um, let us say you invested 50,000, right? So now, this 50,000, since it was your capital, right? And then you made 10,000 throughout the year. So that 10,000, it's your profit, meaning your balance now for the next year will be 60,000. So that is why I'm saying this profit, you will add it to your capital. That is why we added that 245,000 under capital. So information P, a data with credit balance of 650 must be transferred to the creator. So basically, this person is no longer a debtor now, but he or she is now a creditor. So how then do you tackle this adjustment? So let me do this one. So remember, it's a debtor, so it's debtors control, right? DC, debtors control. Remember, our debtors, they increase on the debit side, they decrease on the credit side. Then you also have creditors control. They increase on the credit side, they decrease on the debit side. Right, let me change the color. Oh, yeah. So it was stated that a debtor with a what? A credit balance, right? Of 650. So as you can see, this debtor here on debtors control had a negative balance of 650. So how then do you transfer? Remember, as I stated earlier on, this guy or gent or Han perhaps is no longer a debtor but a creditor. So we need to cancel that person here first on the books of our debtors control. So this will affect our creditors control. So meaning here the balance it's now zero. How so? We're positive 650,000 and negative 650,000 will result as a zero according to our balance. Thereafter, you do your what? Your double entry, right? What you do on the debit side must be recorded again on the credit side. So now this amount will reflect under creditors control from our debtors control. So you see this 650, we do what? We added it here since this person is now a creditor. So we need to add 650,000 where on note number 9 referred as what? Trade and other payables. So under trade and other payables, we need to add that 650. Sure. So now we need to add, so it's plus 650. So when you combine this amount with 650, our okay, oh yeah, I forgot. So we need to add it here, 650. Right, we were doing trade and other payables. Sorry for that. So yeah, we were doing trade and other payables. So it means now when we add that 650 here, it's gonna be 39 150. I forgot about this note, eh? Right, so yeah. So we record that 650 under creditors control. So meaning now we need to add our trade and other payables. So when you combine this trade and other payables, we will have an amount of okay, let me calculate ASAP. So it's 69 350. Yeah. So when you get this 69,350, you transfer it here as 69,350. Right. So let me fix this one. Yeah, sorted. Everything it's okay now. Yeah. Right. So let's move to information C. So information C. So on 30 June 2020, the owner increased his capital contribution by providing a motor vehicle worth 80,000. So obviously that will affect our capital contribution as a positive of, so 80,000. Oh, here. So it was recorded. 80,000 was recorded. Simple. So we need to subtract our drawings. Remember, under trial balance, so we need to subtract drawings. So we minus 145,000. Therefore, when we subtract these drawings, our owner's equity will amount to 594,000. So here it's 594,000 again as our total owner's equity, right? Let's move right along to information D. So the business plans to pay a quarter of the outstanding loan in the next financial year. Okay. Right. So now our loan, it was 400,000, right? So since this person plans to pay a quarter, we will take the loan of 400,000. 400,000, you just simply multiply by 1 over 4 since we have 4 quarters in a year. That means now that 100,000, it's payable next year, which is, it will be our short-term loan. So we need to subtract here 100,000. So when we subtract, we will get 300,000. Remember to transfer this 100,000 where on short-term loan. So here we will record 100,000. Right. Therefore, the last information, I think, yes. So we have a data. Kumalo transferred 1,700 into the bank, into the current account of the business. Okay. So since we have a bank overdraft, we overthrew an amount of 3,200. Therefore, we also had a debtor who transferred. So we will minus that 7,000, that 1,700. So when we subtract, it's going to be 1,500. Right. So total current liabilities now be 170,850. Right, so it's 170,850. So now to get our total, we need to combine our owner's equity plus non-current liabilities, or non-current liabilities, it was 300,000. So we need to combine that and also this. So our total, it's gonna be, so it's 1,064,850. Right. So yeah, so we just completed our 3.1, which is, it's our payables as well as our balance sheet, equity and liability section. I hope the session was therapeutic. See you soon.